Welcome back, investors, to Ticker Time News. I'm Adam, and our top 10 momentum stocks for this week had a 60% success rate. That is a win in my book, and what a wild week it was. Oh, and check your inbox or our Discord server because our updated top 10 dividend stocks for momentum are now out. And if you'd like to get instant access to our top 10 dividend stocks for November, plus our weekly momentum stocks, our weekly expected moves, numerous trade ideas, and so much more, just click the first link in the description. All right, now, with the Treasury market closed today for Veterans Day, cryptocurrencies selling off again after the FTX Group filed for Chapter 11 bankruptcy, and with the sheer magnitude of yesterday's advance in the markets, the stock market had ample reason to cool off today and maybe take a break and give some of those profits back that people gained over yesterday, but it didn't do that. Although there were some pockets of weakness. But overall, the market had not only held up yesterday's gains, but added to them. With the SPY up a percentage point, the Qs up 1.8%, and the IWM up 0.9%. Very nice off of yesterday's humongous gains. It was an impressive display of resilience that was fortified by leadership from the mega cap stocks, continued rebound action in growth stocks, and further weakness in the dollar. And some hopeful news that China is finally relaxing its quarantine guidelines for inbound travelers. And the China news was seen as a first step towards easing up from that economically damaging zero COVID policy. Chinese officials may not want to admit as much, but nevertheless, market participants like the thought of it just as they like the thought that inflation has peaked and the Fed will soon take a less aggressive rate hike approach. Accordingly, today was driven prominently by an upside bias and risk on dynamics. The energy sector, XLE, up 1.3%, and it led the sectors, and it also helped to push the S&P 500 just above that 4,000 level in the afternoon trade before encountering some real resistance that left it just shy of that mark when the closing bell rang, exactly 3992.92, where we sit right now. Oh boy. I feel like selling into strength like the money managers do, LOL. Let me throw that up there. That is true. And I think that's what you saw at the 4,000 level this afternoon. You saw that selling into strength. And it also occurred this morning. And as a matter of fact, let me go to the 5-minute chart here. Yeah, I'm up. Let me also throw this one on the screen too. You're up a whole bunch in this past 2 days. Absolutely. Let's fix this chart and adjust it and get it opened up. Yeah, look at that. Man, I can't even fit it on the screen. The past 2 days, that's what you see. The bulk of it, the big gap up all the way to the left of the screen, just above my head. Huge gap up. And then it just slow ride up and to the right on the chart. Yes, it is. Now, let me show you this. The 4,000 level, it is going to be a difficult one to break through. So let's line this up. The red bar going across the top on the chart here, you can see, and also let me get my highlighter out here. You can see right here, that's the 4,000 level. We tapped it a few times today and could not break through, not once, not once. What did we get to? 4,002? 4,001 was the high for today. So just can't get through that 4,000 level. Now, when we look at this on the chart, when we go back to like the 1-day view of this, or even if I bring this 5-minute chart, let me switch it over here real quick to a 15-minute chart. I want to get a couple more days on here. Just real quick, let this load. That 4,000 level, it's going to be a tough one. Actually, hold on real quick. Let me adjust this chart. Okay, this is looking better. Let's open this up a little bit more here. Just a little bit more. Get a few more days on here. Okay, now let's see. I want to bring this back down a little bit. Okay, starting to shape up now. Now on the chart here, I may have to take it to the 4 hour or so, but at the 4,000 level, that's this red highlighted area right here. That's the 4,000 level. That's where we got today. It's not a, what would I want to call this? It's not a weak resistance area, all right? It is a strong resistance area right here at the 4,000 level. And it's going to take a little bit to get above it. But if we can get in next week and have some momentum to break above 4,000, it's not just 4,000 and that's it, right? It's the level 4,000 up to 4,020. It's like a zone right there. It's going to be very difficult to get through that zone of 4,000 to 4,020. However, if we can break that zone and get above 4,020, I think we have a very clear path to 4115, okay? So on the SPY, that looks like 400 to, maybe 402. So right around that 400 level on the SPY. But then we break that 400 to 401, 402 on the SPY, we can easily get to 415. It's like it's going to be a very, very easy ride breaking above on the SPX. That would be 4,000 to 4,020. We break above that zone, right? If we can chisel away at it and break through, then we've got a clean ride to 4115. Now, again, for the SPY, it's 400, maybe 402, and then it's a clean ride up to 410, 411. So write those numbers down. Make sure you've got them so you can use them to your advantage. All right, let me go back to the 1 day chart here, and I got to adjust it. I know it's messed up. Let's do that and do this. Now, one thing that I do want to point out, 2022, it's been a rough year, right? Look at all of this just volatility on the chart. Now, I want to point this out too. Going up to 4115. Next week, all right, we got some data coming out next week to help with the inflation and Fed narrative, mainly the producer price index. Not a giant mover, not a big weight for the market to carry. But if that has come down also, that'll just reinforce the narrative of peak inflation and a less aggressive Fed. Okay? Let me point two things out. Number one that I want to point out, if we get back up to 4115, which is right here on the chart, that would be 4115. I bet the options market next week is going to come really, really close to that area as the potential top end for next week. It's going to be pretty darn close. But if we tap that, there is going to be extreme resistance at that point. Why? Because this red trend line, it starts all the way up here on the top left-hand side of the chart, right above my head, resistance at that point. That's the high for 2022. And then we meet it again here, rejected. Summer rally, we meet it right here at the summer rally, rejected. 4115 is the next time, the next number that taps that line. Do you think we'll break through this resistance line if we get to 4115? I think the odds are not in our favor. I think if you're talking about selling into strength, that'll be a big area. Plus, something else to consider here, we haven't been back above the 200-day moving average since we barely peaked above it right here intraday on Thursday, April 21st. That's the last time we've been above it. And again, that wasn't a close. That was an intraday. Let's take a peek, see above this line and see how it looks. Oh, too scary? Let's go back down. Right now, the 20-day moving average is sitting right about 40.82. That'll also be a tough resistance. And if you notice at this 41.15 mark here, let me get these highlighters out of the way here. There's this red zone. Okay, let me open this up here a little bit and then adjust the chart so you can see this a little clearer. And this will give you a clear picture of where some real selling into strength could occur. Let's get this lined up. Almost there. Okay, let's raise this up out of the weeds so we can see it. There we go. Much better. Okay, just above where we are right now, I'll grab my highlighter. Here's that red trend line coming down from the beginning of this year. We've got that to contend with. The 200-day moving average is coming in here just like that, and it's hugging this red zone. This red zone matches up with this high right here. This support right here. And if I go further back in time, you'll see, again, it acted as support right there. This is a very active line, okay? And that line is at about 41.15. Coincidence? I don't think so. I don't think so at all. So if we do keep this momentum into next week, that area, once we start approaching 4100, 4115, we're going to hit some serious resistance at that moment. Okay? Now, if we look over here for just a moment, the volume shelf profile, I want to clear it up so we can see. For the past several months, okay, from the top of the summer rally, the fall from August down to October, so for 2 months there, and then the rally that we've been in, okay, and the volatility we've seen with this rally. If you look at the volume shelf profile, there is a clear line coming out right here, okay, and then it drops kind of down like this, and then it starts to fade and go down. So if you look at this box has been the chop box for the majority of the past several months, where we just basically chopped around. But if you look at where we closed at right now, and this is why I say this is important, if we can get above 4,000 to 4,020, there's an air gap with the volume shelf profile. Notice it's up here, and then it goes down, and then it drops down like this before shooting back up real quick. Guess where it shoots back up at? 41.15. These are not coincidences. This is symmetry. This is the chart telling you what to prepare for, what to watch for, where to take your profits, maybe where to add a little bit more, right? So this air gap that I just made, this C shape right here, we break above 4,000 to 4,020. We have nothing in the way to take us up to that 4,100 area. Okay? Understand? Got that one? All right. Now, the same type of action is also playing out on the SPY, right? The SPX and the SPY both tracking the S&P 500. It's just that there's more money and volume going through SPX, and that's why I typically use that, especially for charting, over the SPY. But we'll go to the SPY and we'll take a look at that one too, okay, while we're doing this. Let's do this so everybody can see. I made some gains too. I have trouble identifying the switch from bear to bull pivot and vice versa. I'm trying to trust the chart. Trust the chart, definitely. Trust the chart. Right now, okay, we can't look at things as being, and I know you didn't mean it this way, you're just using those words because they're, what else can we use? It's what we can best identify. We cannot be bullish or bearish minded right now. We have to be tactical. We need to use the chart. Use these points on the chart to identify when to step on the gas pedal, when to take some profits, right? All right, let me show you one other thing real quick here on the SPX before we move away from it and I go over to the SPY. I'm going to get the, let's see here. I want to match this up to the summer top. All right, come on. I guess I have to bring it down a little bit. Okay, Fibonacci. When I match up the summer top, there we go, and I pull it down to the October bottom, what you'll notice is, and I'll get my highlighter back out for this to help you see it, but right here, okay, this is the 50% retracement of the fall that we made from the summer rally top to the mid-October bottom. Breaking above that is significant. And if you look, where did we end today? Right here. Right here. Right on 39.96. That's the Fibonacci number. And we closed at 39.92. Right there. Now, where's the next Fibonacci number? 41.16. Right here. If that's not proof, with everything I've shown you about the 41.15 number, if that's not additional proof that 41.15 is going to be extremely difficult to break through, I don't know what else I could show you. It's going to be hard. But we break above where we are right now, and it is clean sailing up to that area. All right? I hope I am being as crystal clear as I can on these numbers to help you understand where this market could be going. And again, there's no guarantee that we're going to be able to do this, but this is what you need to look out for, right? We break above 4,000. We close above 4,000. We get above 4,020, and then we're sailing all the way up to 41 to 41.15. Okay? All right. Let's go over to the SPY here. And basically, I'm just going to recap what I just did for the SPX on the SPY because it's identical. It's identical. It's just different numbers. All right, let this load. Let's go back out here a little bit. As a matter of fact, let me do the Fibonacci first, since we're already positioned that way on the chart, and then we'll be able to go out and have a broader view. All right, let's get the Fibonacci retracement on here. Let's go to the summer high. which was right about here. And then we bring it down to the mid-October intraday low, and you want to go candle wick to candle wick, okay? All right, now, for the SPY, here's the numbers. Now get the highlighter back out too. All right, the 50% retracement of this fall, again, mid-August, all the way down to mid-October, 50% retracement was 388. 388. We were having trouble at 388 yesterday, just a little bit. Today, where did we close? We closed on this Fibonacci line right here, and that is 398. And we closed, bottom right-hand corner, you can see it, 398. So where's the next area? Where's the next fib? It's up here at 410. 410. That's the next area. And then we have the 200-day moving average, which is at 407 right here. That'll give us a little bit of resistance. So think of this for the SPY as a resistance zone. Okay, a resistance zone from 407 to 410. Now, we also have another area that's been interesting all year. Well, not all year, but going back to June, end of May, beginning of June, we've got this area here. Remember that area where we chopped around before just completely dropping? We chopped around here, chopped around here. So what do you think is going to happen when we reach the destination of 410 on the SPY? We're probably going to chop around in this zone when we get there. Okay? Expansion leads to contraction. At some point, the expansion that we just went on, and what was this bottom down here? Right before CPI, 374 all the way up to 398. That expanding move is going to lead to a contracting mood, right? Expansion leads to contraction. Contraction leads to expansion. The cycle keeps moving, right? All right. Let's clean this up. Can you get a copy of my TradingView charts? I think there's a way to do that. Yeah. I don't know how to do it. I've never done it before, but I'm pretty sure there's a way to do it. I'll look into it because that makes perfect sense. That way I can just share exactly what I've got drawn out here, and then you don't have to go and redo it. So I'll figure out how to share like live action. I can share the chart. So it's you can play around with it too and add your own marks to, or adjust my lines to where you think they might line up a little better. So yes, there is a way to do it. I'll figure out how to do it. Now, I know how to just, tweet out a snapshot of the chart, but there's a way to actually share the chart so you can play around with it too. And that's what I got to figure out how to do. Just taking a picture of it is real simple. Awesome. Yeah. Over here on the camera icon, download, copy chart image, copy link to chart image, no. Open image, no. Tweet chart, no. I know I can do it. I need to figure out how to do it. But that's how I can share images of it. But but the actual chart, I'll figure that out. Absolutely awesome. Okay, now let me open this chart up a little bit here. I'm gonna adjust it first. Now I don't have the big sweeping trend line on here, and I need to put it on here. The one that has captured the major tops all year. Let's see, let's get this lined up. And if I put this and line it up here, it's about right there. Okay, so now you can see, just like on the S&P 500, right at this 410 area on the SPY, that's where the Fibonacci is lining up. The 200-day moving average being at 407. As price action goes up, the swing of how the 200-day moving average is going, it's going to start to curl, to flatten out, right? And that's going to keep it more in line with this 410, 408 maybe number. So there's a lot of resistance built up in that exact area, 410, and that's for the SPY, right? Okay. So I want to keep that trend line there, so I don't need to remove that. I'll go ahead and take well, I'll leave the fib there for now. All right, so I think that's everything. I don't need to show anything else here for the SPY. Just to point out again that the 50% retracement, we went through it yesterday. Today we closed right at 398, and that's the next fib point. And then the next fib point is 410. And then above that, that would be matching the summer rally. Oh, the one thing that I wanted to point out, and I didn't do it on the SPX, I meant to, with the overall trend line that's pointing down, the one that starts at the high of 2022 in January. Let me get the highlighter real quick. Okay, so the high right here, this rejection, and then if we come up to 410 on the SPY and get rejected right here, that doesn't mean that, oh, we're in a bear market now. I mean, bear market. I'm so used to saying that. Oh, we're in a bull market now. Watch out. Sky's the limit. This bear market's in the rear view. No. We can ride momentum to 410 on the SPY, get rejected, and remain in the downtrend. Okay? Because if we start at the January top and then we go to the next time we get rejected in March, that's a lower high. We go the next time at the end of the summer rally, we get rejected in the middle of August, that's another lower high. We go to 410 and we get rejected with this rally, that's just another lower high. And as long as you're making lower highs and lower lows, you are still in a downtrend. So while there is a lot of momentum in this move that happened after the CPI number came out, don't let it go to your head, because there will be plenty of YouTube videos out there saying we're going to the moon, this is it, bear market's over. No. We get to 410, that's wonderful. It's simply a bear market rally. It happens. And they can be really, really strong because there's a lot of money sitting on the sidelines. Everybody's waiting, sitting on the edge of their seat, waiting to get back in. And and they want to get back in so bad. They want the bull market to come back so bad that they FOMO into it. And then when we hit that rejection point and then we start moving back down, what happened? I thought we were in a bull market now. All right. You heard it here first. 410 on the SPY. Be careful at that area. All right. It may not be specifically right at 410, but it's going to be real close. All right. And we may get some contraction at the current Fibonacci level we are sitting at now because we had some wild expansion last week or this week. So we could move sideways starting next week before continuing to go to that 410 maybe area. Okay. That's cool. All right, let's go to the Qs. The Qs, they were a bit more powerful in their move up, which makes sense because they were beaten down even more so than the SPY was. Okay? A lot of technology, they were like the worst performing over the past little while. Okay, so here for the Qs, let's do the same thing here. I don't have the trend line opened up, so let's put one. Starting at the top there, and we're going to come on down. I don't know how far I should bring that. Let's see, right about here. See, it doesn't line up as perfectly as it does for the SPY or the SPX, but there's still one there. Okay, now that we got that, let's open this up a little bit more, and let's get our Fibonacci line set. Okay, now I'm going to open it up a little bit and then drag it up. Okay. Oh, it's good to see you guys chatting in the chat. I like that. That helps to fill some of the quiet parts when I'm trying to move the chart and it's lagging behind. All right, need to bring it up a little bit more, get it out of the weeds here. Okay, there we go. Now let's go do the Fibonacci retracement. We're going to put it at the top of the summer rally. And then bring it down to the bottom here in mid-October. There we go. All right, so we got it set now. Let's get the highlighter out. Okay. So for the Qs, we did not I feel like sending you a laptop. I work in IT, LL. That's funny. Yeah. Next bull market, I will get a laptop and stop using the Pixel Book for live streams. I promise. I gotta throw that up there. That's funny. Because it's true. It is true. I do need to do that. Okay, so for the Qs didn't quite make it to the 50% retracement. But this line right here was tricky for the Qs, and it was right about 284. 284. It broke above it today. There was some hesitation, but it finally did. 50% retracement for the Qs is right about 294, right here. 294. And if we go back and look, there's not much going on recently at that 294 area. But if we do go back further, there was a day of support, and then there were a few days of resistance right here at that 294 level, and that's really it. So that would be the 50% retracement level for the Qs, and that's 294. Now, if we look at that overall bear market down trend line, it kind of connects right here at 303 for the Qs. So that would be an interesting area because there was a little bit of resistance right here at that number. And then that was also a support zone when we were chopping around back here. So that will be an interesting one to watch. Okay. And then I don't know that we'd get too much higher than that. The 200-day moving average is at 310. I think that would be like the absolute max there for the Qs, 310. And even 310, if that does happen, that breaks above that downtrend bear market trend line, but it still sets in a lower low from the summer high. Okay, so the trend would still be negative. Now, if we started to break through the 200-day moving average for the SPX, for the SPY, for the Qs, then maybe we could get to a point where we make a higher high off of the summer rally high from mid-August. But that's a big, big if. A big if. I don't think that's gonna happen. Not yet. Not in the near term for the Qs or for the SPY or SPX. All right, let's clean these highlighters off here for a moment. So you got those numbers for the Q, 294. That's the 50% retracement level. There is prior resistance and support at that level. And then right above that, we're going to look at the 303 level, okay? And that could be the max for this rally. Now, for all of these, the Q, SPY, SPX, it is possible that we chop around and move sideways next week, because there will be at some point more broad-based selling into strength. Okay, that will occur. All right, let me go to the 15-minute chart here for the Q real quick, just so we can see it from that perspective. And the fib lines are still on here. I want to open it up just the past 2 days on the chart. Give it a moment to fill in here. And let's swap up. Let's swap those up. All right. Let it fill up. I got to move it a little bit. Okay. Now, on a short-term basis, the Q did hit a resistance zone. And as I tighten this chart up, the last time we were at this 288 area, we also had a little bit of trouble. Okay. Something else to show you here as we bring this in a little bit. You can see on this chart, this prior area. No, I do not think it can run to summer highs. No. I don't think we're going to make a high above the summer high. Even for the Santa Claus rally, now I'm thinking about that for just a real quick second. I guess it is possible if the Fed plays along and instead of doing a 50 basis point rate hike in December, and if we get some sort of a signal that, hey, maybe they're going to do a 25 basis point rate hike, then I think there's some potential to potentially, if all of these ifs line up, that we could potentially test the summer high, the summer rally high, the mid-August high. But there's a lot of ifs out there still before we could potentially even consider that. But these numbers that I'm putting out right now, these are more near term, within the next couple of weeks, what we should be looking for in these products. Okay. All right. So for the Qs here, you can see this resistance we had back here in October, and it put a little drag on our current rally, but it still managed to break through. It sunk under, but it was able to catch its feeding, get some momentum, and break back above it. So that's good. All right. But we are at a bit of a cap. Like if we measure the bottom here, okay, which this is the November 4th bottom. If we measure that, 50% is about right here. That's where we gapped up from. So we were down here right before CPI came out and then gapped up to this area right here. And then we marched on. So this was a full measured move, right? We went like this, straight up here. That's 50%. And then going up to here, that would be the second 50%. Okay. So we got our full measured move, and that's where we tapped out today. So it's good to use these Fibonacci's to help you know and learn where other zones are that you may not see just with trend lines. All right, let's clean this chart up here. And then let me show you real quick. All right, let me take this Fibonacci. I'm going to put it on this low, which was right here on the 4th of November. Let me line it up. Okay. And then if we just go straight up with it, okay, and if I put it there, the 50% of this move from November 4th to now comes nearly spot on with the weekly expected move. It's just underneath the weekly expected move. Do I still have? No, I don't have my highlighter. Let me get the highlighter. And also, let's do that. Because I answered that question. There's a lot of ifs to get to the mid-August. All right, right there. That would be the 50% of this move right here. So it was pretty equal in its structure. All right, let's clean that up. All right. Okay, let's go to the IWM and then just a couple other things to talk about here in my notes. But I just want to get these numbers out to you guys so you have them. Bitcoin also bear flagging on the 1 hour. Yeah, we can look at crypto too. It's been wild, just wild. Okay. So just a real quick something to point out here. Looking at the volume shelf profile on the left-hand side, the candles that are on the side. This is an example right here. So there's a candle. It comes out, as a matter of fact, it's lining right up with the weekly expected move on the top side. And then there's a bit of an air gap because the next candle is like really small. And I just want to draw this out for you just to show you. Because when you get these little air gaps right here, okay, there and then, so this candle is like really short compared to the candle before it and the candle after it, okay? Now this air gap right here coincided, and I'll line it up over here with this move here, and then the bottom of that was the breakout point right here. When we retested, we came up, we hit the weekly expected move, we stopped, sold off a little bit before then just shooting up straight past it and just running with it. So when you have these air gaps, that I call them, within the volume shelf profile, price action can move swiftly right through where those air gaps are. And that's exactly what we saw this week on the 15-minute time frame here with that. All right, let's clean this up here. So again, if CPI next month comes in and inflation has gone down just like it went down this month, if the Fed comes in and says, well, let's do a 25 basis point rate hike instead of a 50 in December, those are the type of what ifs that when we get closer to the event date of that happening, those are the what ifs that would propel us to potentially retesting the summer rally high or the mid-August high. But I don't think we're just going to go there on the information that we have right now. I think we're going to go to these specific levels that we're talking about, that I've laid out here for the SPX, for the SPY, for the Qs, in the near term. All right, so let me open this up here for the IWM. And we've got that same 2022 trend line. It's coming down, making lower highs all the way down. Even the summer rally high, it was a lower high from the previous high back in the end of March. So I want to open this up. I want to put the Fibonacci on here. Just give it a few moments. I know it's lagging. Trying to open this thing up. All right, let me pull it out of the weeds here. It would be super awesome if things just went smoothly and quickly, kind of like they do when I'm not doing a live stream. All right, let's go to Fibonacci. We're going to the summer high. And we're going to match that up with the mid-October low. And then you can see what we've been working with here for the IWM. Okay. Open it up a little bit more. Okay. All right, and then I want to bring it up a little bit and then get the highlighter. Okay, now I can get the highlighter. It's where I need it. All right, so the 50% retracement is right about here, okay? And then that corresponds with right here. No, my markers aren't straight there. We ran into a little bit of headwind there. That's about where when we gapped up on good CPI data, we gapped up just underneath that 50% retracement, and then it kept on moving. Now, for the IWM, that downtrend line is right here, okay? And then the next Fibonacci would be right here. Where did we close today? The IWM closed right here, where we have 3 different types of resistance. We have the 200-day moving average, all right? The 200-day moving average is right about 186. Where did it close? 186. So maybe about 75, 80 cents above where the 200-day moving average is. Also, the 2022 downtrend, okay, the down moving trend line that has captured the top of 2022 and captured the top of the summer rally, we stopped right on that down moving trend line. And then the third resistance point, we stopped right on the next Fibonacci line, okay? So we had a trifecta of resistance points at the 186 to 187 zone. And that's exactly where the IWM stopped. So the IWM is in a completely different place than the SPX, the SPY, and the Qs. It's ahead of all of those other products. So now we've got to be wondering, well, is this it for small caps? Or do small, excuse me, I apologize. A bit of a hiccup there. Or do small caps have more to go? Okay. So we got to open this up and look at a bigger picture here. Because a trifecta of resistance points, that's exactly what the IWM, and again, that's your small caps like the Russell 2000. This trifecta of resistance points is exactly what stopped the IWM in its tracks for the summer rally in mid-August. Now, that mid-August top was the top for all the products. They all reached the same point at the same time. Now is different. Small caps are ahead of the game. They had a big squeeze over this week. And that pushed them right to the point where the SPX, the SPY, and the Qs could be headed. So, going back to the question about, do you think we could run to the summer high Santa Claus rally? Maybe that's what the small caps do. if they can still remain in favor, because earnings are wrapping up. So we're not going to get that bad news, not until next year. What else could there be? Well, if inflation comes down again in December, that's more good news. If the Fed, for some reason, backs off and does a 25 basis point rate hike instead of a 50, that's good news. So maybe to your question, maybe the small caps, the IWM, can reach that mid-August peak before the year is out. But it's a lot harder to do, especially for the Qs. And then it's a little harder to do for the SPY and the SPX. Okay? So I hope I'm making sense with that. But the next area for, I think, the IWM to really be cautious of is just slightly, 190. That's not that far away, 4 points away. 190, I think, could be a tricky area. And that lines up here. That lines up right here. Also, it lines up with the volume shelf profile. And it also lines up with the Fibonacci. That's at 192. So maybe that's where the small caps can go, and that would still make a lower high. Anything under the summer rally high of what, 200, 201? As a matter of fact, I can give you that exact number. There's 199. Still 199. Okay. I know it broke to that 201.99. So anything under 201.99 as a peak would still be a lower high for 2022. Okay. So I think the 190 area for the IWM is kind of like, well, it's at a trifecta of resistance points right now and closed literally within pennies of that resistance area. Maybe 190, if it could break that, maybe that's where the small caps could go. But that's, again, adding a little bit of a what if to the mix, but I can't see how it would go any other way, quite frankly, if we still have good news. All right, let's clean this chart up here a little bit, and then I'll continue on with a couple of the notes that I had here. Oh, there it is. Two more. I know I don't like the lag. I don't know. Whenever it's doing a live stream, just doesn't have enough processing power to get it all done. Oh boy. Oh well. It works. It just takes a little longer than it should. You know, during the day when I'm using it, not doing a live stream, it works just fine. And I never have any problems with it. Okay, and then I'll take the fib off of the IWM as well. There we go. That's looking better. Okay, so let me pull up energy here real quick. XLE for energy. Energy was up 3.1% today. It did really well. If China opens up, that's just going to cause the price of oil to continue to rise. And our top 10 momentum stocks for this week was very heavily leaning towards energy. They have just been momentum leaders for the past couple of weeks. But after CPI came out, we had a rotation out of defensive sectors like healthcare, utilities, and then into some of the other beaten down areas. So you can see here for energy, I mean, it finished right within its weekly expected move. 95 on the top end, 87 on the bottom end, and it finished at 103. So that helped push the S&P 500 up. And of course, the SPY did have some help too because of this. Now, other leadership today included consumer discretionary. That would be XLY. Really beat down. Really beat down. If you can plug into Ethernet from your router, it might help. If you're on Wi-Fi, that could be a problem. I am on Wi-Fi. It's a Pixel book, so I mean that's like Google's own Chromebook. That's what I use for the live stream, and I do use Wi-Fi in the home network here, because of course it's in the basement, and I can't get a line to it unless I run a line, up the steps and through the hall to get to it. But yeah, that would be a much better setup than doing this. So I appreciate that. Absolutely. You are welcome. Okay, so consumer discretionary up 2.5%. Real nice. It actually closed above its weekly expected move, which was at 143, closed at 145. It had gotten beaten down. It set a new 52-week low just the day before CPI. Consumer discretionary had a 52-week low. That's how bad they've been beaten down, or that sector. Communication services had a good day, up 2.5%. Information technology was the best performing sector for the week, but it was up 1.7% today. Actually, let's pull up XLK for technology and look at that real quick. XLK, it did real good. I also took a speculative swing trade, and let's slow this up here. Over the weekend, I bought a couple coin puts. Oh, cool. Interesting. Yeah, that news about FTX, that just totally messed up the crypto space today. Okay, so here, this is the technology sector. I want to move it up just a little bit here. It did good. It totally exploded out of its weekly expected move. The upper end was 126, and it got to 133 today. And it closed right on its 50% retracement level. If you go from the high where it tapped, and let me get my highlighter again, where it tapped its 20-day moving average. Okay, come on, highlighter. Yeah, I'll pull coin up here in just a moment. Right here. And then the bottom again would be right here. And then it closed right on its 50% mark on its way up. Really interesting there. And then the volume shelf profile, it also cuts off right at that point. So there's nothing for it. There's no buyers there. There's no sellers there. I mean, the volume just completely drops off at the higher price points here. So big, powerful move. I'd expect, profit taking to occur here for sure. All right. Materials was another good sector today, up 1.2%, as well as semiconductors. Let's pull that up. SMH for the ticker symbol. That's the Van Erik Semiconductor ETF. Let's see how that did for the week. I know it had a big day. Look at that. Oh my goodness, semiconductors just took it. 3.1% on the day. Wow, and up over 15% on the week. Whoa. Just completely skyrocketed. It's above that 50% retracement there too from the recent downtrend that we've been in. Just a complete breakout right here. Wow. So it's going to be, there's some resistance coming in for it, probably right around 225. There's some pretty stiff resistance at that point because we've got good support at 225. Right here, right here, right here, across that when we made the double top there. So that's getting real close to that 200-day moving average as well. So I don't know if there's much juice left here for technology. We'll have to keep a close eye on that. If it could break out, that would be interesting. But that 200-day moving average has been such a pester, a pain for semiconductors. That's just incredible how it has broken out here. Wonderful. I believe even Intel did good today and was in the green, even though it was downgraded by JP Morgan. So that obviously helped tremendously. Now, there were a few areas of weakness. I mentioned a few of them earlier. Defense-oriented. Before I do that, let me pull up coin. And we've got, okay, COIN. Coin, when it IPO'd, I took a bad trade on coin and had to get out of that. And I've messed around with it a little bit before, or since then, I should say. Yeah, look at that. 12.8% it pulled today, but before that, this thing had just been crashing. And even if it gets some momentum, this area here, support area, a support choppy area, another support area, but then it turned into resistance for the last 2 days that it was in that area. That's right about, what would I want to call this? 61.75. That's going to be an area to watch out for if it can keep this momentum. And if not, if it does end up breaking through that, then its chop box that it's been running right along here, where it's just been expansion, expansion, maybe a little contraction there, expansion again, contraction, expansion, kind of choppy, not really anything there. Another expanded move, and then a big expansion, another big expansion. Just wiggling all around there. So interesting. Jerome isn't wrong about tightening financial conditions. I want to go spend more money now, seeing my long-term portfolio. Yeah, I want to go shopping for the long-term portfolio too. So make sure that you are keeping a shopping list of companies that you want to hold long-term. So when we do break this bear market, you can hop into it. One of them for me is the trade desk. TTD is the ticker symbol for them. This is one for the long-term portfolio for myself. I think they're a great company. So definitely make sure that you have a shopping list of companies you want to buy when we finally flip the script on this bear market. But you can see trade desk has just been hammered completely. Had a nice little bounce today and yesterday. Let's see here. Oh, AMD, didn't they have a good day today too? I started building on AMD, Apple, Meta. I'm up a lot. Tempted to sell, but that's counterproductive. Yeah, it is. It can be, for sure. All depends on your perspective, right? Your perspective. Remember the meme that you guys shared with me? That you shared with me on Discord? 7.7% inflation back in February, and everyone's like, oh man, 7.7% inflation in November, and we're all dressed up in our tuxedos and having a wonderful time. I meant spending money on stuff, not stocks. I'm up almost 5K in just 2 days in my long term. Yeah, it's wonderful. Absolutely. It was a tremendous past 2 days. Absolutely. That pent up demand, it was just waiting to explode. Absolutely waiting to explode. All right. So just a couple of things here on the notes just to finish up the thoughts here. Weakness. It was in defensive oriented sectors. Again, healthcare was one of them. Utilities was one. They were both down on the day. Rotating out of those sectors into beaten down sectors like technology, semiconductors, which is subsector, but you get my drift there. Market participants rotated back into some of the most beaten up stocks and sectors. A lot of growth stocks. Got it. Now, to be fair, though, those defense-oriented sectors finished well off their worst levels of the day. So there was some buying the dip on those, even though they've performed really well all year long. The healthcare sector, just to give you an example, it was down as much as 2.6% earlier in the day before picking back up. Not too bad. So they were good. Mega cap stocks, they did absolutely great. They've really been beaten up over the past week or two. So it was good to see those finally taking off today, and they showed a lot of relative strength throughout the session. I believe the Vanguard Mega Cap Growth ETF was up 2.1%. That's great. The leadership from all of them were solid, and it kind of helped growth stocks to catch favor again. The Russell 3000 Growth Index was up 1.5%, while the Russell 3000 Value Index was up 0.6%. So a full percentage point difference there between value and growth. And then the US dollar, it really took a beating, and it was not in favor at all. The US dollar index dropped 1.7% today, down to 106.38. It was down 4.1% for the week. Look at this. We've talked a lot about the dollar, and when we were at those inflection points, where we said one of them's got to give. Either the dollar's going to give or equities are going to give. One of them have to. And it was definitely the dollar that broke down, giving room for equities to just take off. Now, the lone economic data point that was released today was the preliminary November University of Michigan consumer sentiment. And it was a little bit weaker than expected. It came in at 54.7. The expectation was 59.6. It was at 59.9 just a month ago. So that's that. That came down. Also, looking ahead at inflation, all right? We've got a year ahead and we've got 5 years ahead for inflation expectations. They did go up a little bit. So 1 year from now, we're looking at 5.1%. inflation expectation. 5 years from now, we're looking at 3% inflation expectation. And again, that comes from the University of Michigan in their consumer sentiment report. So that 2% target rate for the Fed, even 5 years from now, those that take the study don't think it's going to happen. Now, there won't be any economic data of note on Monday, but the week ahead is packed with the producer price index, retail sales, industrial production, housing starts, and existing home sales reports for October. Those all come out next week. So the housing market does have some data that will move the housing market, like what would it be? XHB, I think is for the home builder ETF. I'll have to double check on that one. But that could see some movement next week. So that's it, really. Nothing else to talk about. Do you guys have any questions? Want to look at anything? Or are we good for the week with the gains that we made? Let me know. I'll give you a minute. If you could, click that like button for me and share this video with a friend. Those two things greatly help out here. And just staring at the chart here for the dollar, it looks like really maybe where it landed today could be a support area. We do have that area being resistance back here in August of all places. And maybe down here to the 105 level. Interesting, just staring at it. All right, you are welcome. Oh, Bitcoin. Yeah, let me put up Bitcoin and we'll look at that. And that was the 1 hour chart, I believe. Because the daily chart, you're not going to see it. It's just going to look funky as all get out. So it is interesting where the volume shelf profile sticks out right here. Also, my theory that I talked about on Wednesday about Bitcoin, it seems to be holding up kind of well. But that blue line right there, that seems to be like the top, a lot of resistance at that point. And then down here, oops, why did that pop up? And then down here, again, why are you popping up? I don't want you to. Okay, let's try that one more time. Down here, yep, there we go. Down here, resistance is kind of a chop box there for Bitcoin if it can get back up to it. At some point it will. All right, let me drill in here a little tighter on this daily chart. Then I'll go to the hourly chart for Bitcoin and we'll wrap it up. Thank you for reminding me about it. Now, that trend line that I have, it's that purple line that's coming down. And as I open this up, okay, you can see that it tagged it with the wick. And I was wondering if this was kind of the line in the sand for Bitcoin. And this trend line, it seems to be, at least right now. And you can see Bitcoin has been, at least on the wicks, been moving back up. But then if we go like this, well, we're getting a symmetrical triangle there, even though that's a very ugly symmetrical triangle. But this trend line down here is very interesting to me. I'm watching this one closely. That could be the line in the sand to hold up Bitcoin. All right, let's go over to the 1 hour chart. Yeah. Let's see here. If I'm going to trend line this out, I'm going to put it like like this. And I got to change the color of that, but I'll come back to it in just a moment to change the color. And then I'm going to take it from the top right here and run it down like this. And then you can see that we are getting into a contracted phase here. And let me change that color because it's support. That Bitcoin's going to break out of this. And it could be a pretty big move. Now, I don't know on the 1 hour time frame here. I'm not so sure that I see a bear flag there. Even if I mean, yeah, it could be a continuation pattern where it broke down, and then if it's gonna break down through this, then it's gonna come down and retest the low made right here if it breaks down. Okay, if it breaks up or breaks out, let's measure from the bottom here to the top. What do we have here? That's a big 16% move. So if we're here and we happen to break out of that, that goes to the 200-day moving average. Okay. We are getting a lot of swings on this line right here at about 16,820. 16,820. We're getting a bunch of swings there at that point. So if this does happen to break out, then it's probably going to go try and tag that. I guess that would be the 200-hour moving average there. If it breaks down, then it's going to go test the low that was made. And then it could end up going as low as that purple trend line. That would be interesting. But on the 1 hour time frame here, something's gonna give here. Let me drop down to the 15-minute and let's see here real quick. Yeah, it just really highlights how price has tightened up here. Yeah, so if it breaks out of this, it could be a pretty strong move to the upside. But if it breaks down, that's definitely something to watch because it's gonna happen shortly. Maybe midnight East Coast time. Maybe that's when it might reach its endpoint there if it just doesn't continue to move sideways. But everybody who is playing it technically is watching this exact same point right here. And you'll probably see some wild swings once it starts to break out of this. Interesting. And it's also interesting too. If we go from this low up to, oh, it didn't. Oh, it's lagging so much right now. I want to get the Fibonacci on here. There we go. All right, so if we measure from that low to the high, it is sitting right there on that, just above that 50% retracement. That 50% retracement area is getting a ton of price action. Resistance, support, and then resistance, and then resistance, and then support, 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 and it's currently above it. Very interesting. Oh, now where'd the chart go? Okay. Well, if you guys are, if you guys want to get into a trade, watch Bitcoin here, because it's gonna do something. It looks like pretty darn soon, and it could be a big move, down or up. 17,800. Let's see, 17,800. Oh, a little too high there for that. Yeah, I can see where that is. If I back up here just a little bit, this line right here, this is the right about 17,800 right here. Oh, it's right here, that 17,800 right there. So I'd probably look for this to, it looks like it wants to break out and go up. And that's what price action kind of looks like here. And, you know, since it was in that big down, big fall, it's kind of tough to predict because it was such a big move down. All right, let me do this. But I'm thinking that's looking more like a symmetrical triangle there on the 15-minute chart and on the 1-hour chart, which those can break either way. When you're looking at the symmetrical triangle on the chart. All right, it's not loading that history back, but it's just a big drop down. So I would keep an eye on this. Maybe in a few hours, it might break, and you could catch a nice run. If it breaks out, wonderful. You could get a nice run there. If it breaks down, watch this this low that was made, which is right about 15,500. or this the purple trend line that I have drawn out here, which if I move forward in time just a little bit to Saturday, it's sitting right about 15,000 even. So there's about $500 difference there. So watch that area if it does break down for a bounce in that $500 spread there. All right. Well, we'll wrap it up for today. I appreciate each and every one of you for joining me. I absolutely love doing these live shows, interacting with you, and talking to you, answering your questions, looking at charts together. And I'll look and see if I can't figure out how to share a chart with you in TradingView. I know it's doable because I've seen it before. And I'll get back to you on that one. So we'll wrap it up for tonight. Click that like button for me. Share this video with a friend. And if you like the perspective and you want more of it, click the first link in the description. And yeah, that's that. So have a wonderful weekend. I'll be back Monday after the market has closed to talk about what happened, why it happened, and what to expect. So again, I appreciate each and every one of you for joining me here. You are very welcome indeed. Have a great weekend, and I'll see you in the next video. Take care.